Attention everyone, gather close, because what many have waited years to witness is finally taking shape, sending ripples across financial systems worldwide. After endless debates, speculation, and unconfirmed chatter across foreign exchange forums, the long-anticipated moment has arrived. The Central Bank of Iraq (CBI) has formally activated newly adjusted reference rates for both the Iraqi Dinar (IQD) and the Vietnamese Dong (VND). This isn't a rumor, nor is it a whisper from speculative circles. It's a formal institutional action now echoing through international banking networks, marking a powerful realignment in how these two currencies will be recognized and valued globally. The move is far more than a routine policy tweak. It represents a strategic recalibration of financial sovereignty by two rising economies. Baghdad takes the lead. Sources close to Iraq's financial leadership confirm that this development was not spontaneous. Behind the closed doors of the CBI, months, if not years, of technical groundwork have been underway. The central bank reportedly completed complex internal recalibrations involving payment networks, compliance testing, and cross-border systems alignment before making anything public. This effort included synchronizing SWIFT messaging and settlement platforms, ensuring compatibility with international rate databases, reinforcing foreign reserve liquidity and swap lines, validating monetary policy tools to sustain new rate levels. In essence, Iraq has quietly engineered a complete financial reset, aligning its currency infrastructure with international systems. This shift now places the dinar on a more stable and credible footing for trade, investment, and capital flow management. Vietnam's parallel move. What makes this moment even more remarkable is the timing. Simultaneously, Vietnam appears to be executing its own recalibration of the dong. Banking data emerging from Hanoi and Ho Chi Minh City suggests that official reference rates are being restructured, reflecting more flexibility and responsiveness to market conditions. For decades, Vietnam's central bank maintained a closely managed exchange regime, prioritizing export competitiveness. But now, with strong reserves, trade surpluses, and record foreign investment, it is increasingly capable of allowing its currency to appreciate toward fair market value. Analysts see this as a natural evolution, a sign that Vietnam is ready to assert monetary independence, allowing the dong to function within a more transparent and liberalized market environment. By moving alongside Iraq, the two nations could be signaling a coordinated step toward financial sovereignty, untying themselves from rigid pegs and positioning their currencies for international relevance. Chase Bank sends the signal. One of the strongest validations yet has come from the heart of U.S. finance, Chase Bank. In a carefully worded internal statement, Chase confirmed it is preparing its foreign exchange systems to accommodate the Iraqi dinar and Vietnamese dong under new operational parameters. According to internal sources, FX trading desks are being reconfigured. Compliance frameworks are being updated for new risk models. Settlement mechanisms are being optimized to handle higher liquidity flows. For global traders, such signals are not cosmetic. When a top-tier bank like Chase makes operational changes tied to specific currencies, it implies real transactional readiness, not speculation. It suggests that the transition from rumor to reality is already unfolding within institutional layers. From hype to implementation. For years, the notion of an IQD, revaluation, lived in the gray zone between optimism and myth. But now, with Baghdad's activation, Vietnam's synchronized adjustments, and Chase's internal reconfiguration, the narrative is taking on concrete institutional form. Questions remain about timing, liquidity, and how quickly global platforms will adopt the updated rates. But the presence of technical, regulatory, and banking infrastructure changes marks a decisive shift from internet chatter to structural market transformation. If these developments hold, the effects will reach far beyond currency trading, influencing trade contracts, foreign investments, credit ratings, and national credibility on the world stage. The long road to this point. To appreciate this turning point, it helps to look back at how Iraq rebuilt its monetary framework over the past decade. The country focused on increasing reserves, tightening fiscal control, and modernizing transparency standards to align with IMF and BIS benchmarks. The CBI has also pursued digital modernization, launching upgrades to its real-time gross settlement (RTGS) systems and reinforcing connections to global payment networks. This digital infrastructure is essential, a new exchange rate means little without a banking system that can settle, clear, and report transactions seamlessly in real time. Equally critical was Iraq's clampdown on black market trading. By restricting unregulated exchange activity and centralizing currency distribution under formal oversight, the CBI strengthened the credibility of the official rate. This cleanup was necessary groundwork for any meaningful revaluation to be sustained. Vietnam's journey, while smoother, reflects a similar story: gradual liberalization, economic growth, and a steady build-up of investor confidence. Its trade-driven expansion and global manufacturing role now support a currency capable of standing stronger in the international arena. Why Chase's role is pivotal. Large-scale currency revaluations only succeed when global financial institutions participate. For Chase, a systemically important bank in both U.S. and global clearing networks, to prepare for new IQD and VND flows means the groundwork for international settlement and rate adoption is already in motion. Such preparation involves coding updates, recalibrating quoting algorithms, risk rebalancing, and KYC/AML compliance reviews. Once Tier-1 banks like Chase, Citi, or HSBC activate new rate infrastructures, smaller banks tend to follow, triggering a cascading integration across the financial system. In short, the plumbing is being tested before the public tap is turned on. Market activity and rollout. Early reports indicate growing buzz across Forex desks, chat rooms, and private trading circles. Order flows are reportedly being monitored closely, while back-end testing of recalibrated rates continues quietly. Public-facing FX platforms have yet to fully reflect the new numbers, likely part of a staggered rollout strategy to ensure system stability and regulatory compliance. Some private holders in the U.S. claim to have received notifications from exchange or brokerage offices, requesting updated verification for pending transactions, a possible downstream effect of Chase's system readiness announcement. Market watchers expect a phased exchange rollout, prioritizing institutional and high-volume traders before opening retail access, ensuring that the process remains stable and compliant with oversight agencies. Regulatory oversight and stability. No currency revaluation can advance without tight regulatory supervision. Agencies such as the U.S. Treasury, OFAC, and Financial Intelligence Divisions will be monitoring compliance, transparency, and anti-money laundering safeguards closely. Before any widespread public conversion becomes available, all systems must undergo extensive audit verification, cybersecurity tests, and AML/KYC validations to ensure legal and financial integrity. Both Iraq and Vietnam will also need to manage domestic capital flow pressures and speculative surges carefully during the initial adjustment phase. A symbol of sovereignty and renewal. Beyond the technicalities, this moment carries deep symbolic weight. For Iraq, it signifies emergence from years of instability into a phase of financial legitimacy and self-determination. For Vietnam, it represents an evolution, a nation ready to compete globally not through undervaluation, but through economic credibility and strength. Together, their synchronized moves could redefine how emerging markets reclaim control of their currencies, signaling a collective shift toward a more balanced global financial order. Final outlook. While official public rate displays are still limited, multiple verified reports suggest that internal banking systems are already live with adjusted values. A gradual, controlled rollout remains the most likely approach, one designed to prevent volatility and ensure that liquidity, compliance, and stability remain intact. For now, traders and investors alike should monitor developments closely. What we are witnessing may be the early stage of a systemic realignment, a transition from decades of suppressed valuations toward true market reflection. Stay alert. The next phase of updates may confirm what many have long believed possible: a tangible, institutional revaluation of the Iraqi dinar and Vietnamese dong, grounded not in rumor, but in action. Disclaimer. This report is for informational and educational purposes only and does not constitute financial advice or official confirmation of any currency revaluation. References to the Central Bank of Iraq, CBI, Chase Bank, or other entities are based on publicly available information and market commentary. Foreign currency speculation carries high risk. Always verify information through regulated financial institutions and consult certified financial professionals before making any investment or exchange decisions. Neither the author nor the publisher accepts liability for any losses arising from the use of this material.